Good morning and welcome to this Monday, April 27th edition of Trading Places Live at EarningsBeats.com. I'm Tom Boley, Chief Market Strategist here at EarningsBeats.com, and I'll be your host for the next 30 minutes featuring everything you need to know as you prepare for the trading day ahead. Well, we had a pretty decent day on Friday. It looked like last week we were ready to roll over and perhaps start another leg down, but we rallied into the end of the week. Saw the Nasdaq actually close to a breakout, not quite getting there. And now we've got futures pointing higher again today. So overall, I'd say things are looking pretty good. If we go in and just take a quick look at the recap here, you'll see that the Dow did finish up more than 1% on Friday, up 260 points. Last time I looked, in fact, I'll get you the latest here. But futures were up about 260 points last time I looked. For the Dow. It's come down a little bit, up 208, but still looks like going to be a pretty good open this morning. Nasdaq futures are up 100 points, over 1% today. So Nasdaq seems to be leading things here in the morning, but we'll have to see whether or not that continues throughout the day. But the Dow, like I said, did finish strong on Friday. We had the S&P 500 up about 1.4% on Friday, back above 2,800. Nasdaq up 1.65%, so beginning to show that leadership again, up 140 points. So we were back over, we cleared 8,500 and 8,600 same day, got back up to 8634, and not too far from where we were just about a week or so ago. Mid caps up 1.4%, small caps up just a little over 1%, so small caps lagging again. And, you know, when you just look at the market, you can see the Dow and the S&P both challenging their 50-day moving average, but above their 20, so kind of squeezing between those moving averages. Then you look at the Nasdaq, and you can see clearly better performance where we've gotten through the 50, and the 20 days actually preparing to cross above the 50. So that would be a golden cross, which is bullish technically. And then when we look at the mid caps are just a little bit above the 20, but the 20 and the 50 are separated quite a bit, much more so than we saw on the Dow or the S&P, and certainly the Nasdaq. And small caps, same thing. So the relative strength, I think, when you look at these charts is pretty clear that we've got mid caps and small caps lagging, Nasdaq leading, and the Dow and the S&P kind of in the middle of the road. Technology continuing to perform well. We had another up day last week. Friday, we closed with gain of more than 2%. So XLK, a break back up above 90 would be very bullish. So if the Nasdaq's up more than 1% with futures, I would suspect technology, I haven't looked at the pre-market, but I'm assuming the XLK will be at 89 and change. So today, one thing to watch for is see whether or not we can get that breakout on technology above 90. Some big earnings reports coming out later this week, which we'll talk about in a minute. Discretionary stocks also had a nice day on Friday, up $1.87 or almost 1.7%, also trying to break out from the high a week ago. And then rounding out the top five, we've got materials and financials. Both of these have been lagging, especially financials. Really what the financials need more than anything is for that 10-year Treasury yield to begin to rise. And it is up 3 basis points this morning, so maybe we'll see some more strength in the financials today. But we've got a lot of work to do technically to get back through the recent high, to get through that 50-day moving average, and to begin to show some relative strength. And if you notice down here at the bottom, all of these accumulation distribution lines look pretty good on these sectors that we're showing, except financials. Financials nowhere near the high that it set back in December, and it was starting to roll over again with the price action recently. So that's not looking very good. One of the best, though, healthcare. So healthcare had a pretty decent day on Friday. You can see the XLV actually not far from a breakout to another new high. So this is clearly the strength of the market, and just about everything I look at and research is telling me to stick with healthcare, that this is an area of the market that's not only strong, but it's strengthening and likely to continue to strengthen based on some breakouts in some key areas like the biotechs. So overall, I mean, I think the action on Friday was pretty good. Again, last week we had the opportunity for the bears to really take things to the downside, and it just didn't happen. You can see early last week, Monday and Tuesday, we rolled over. If we had lost the 20-day moving average, lost this price support, it could have been, off to the races back to the downside, maybe to challenge the early April low and maybe even to go all the way back down to that March 23rd low. But instead, we saw what we've been seeing throughout this last 5-week rally, which is basically the bulls stepping back in when they need to, technically. And that's been a good sign. So as long as that continues to happen, I would remain on the bullish side of things. I would not bet against the market, especially when you've got the Fed supporting the market. You've got government, supporting the market with these stimulus packages. The Fed, by the way, meets again tomorrow, and we'll have a decision on Wednesday. So it's the latest 2-day meeting coming up. I don't know what the Fed's going to say, but I can't imagine they're going to say anything that's going to hurt the market. Chances are they're going to try to instill confidence. So I think trying to short this market, in my opinion, is it's kind of a strategy of futility of late. Even when you get a couple of down days like we saw early last week, the bulls come right back in. So next up on the S&P 500, and what we should be watching is, you can see on that initial move to the downside, 2,900. And, things were pretty uniform back then. And when I say uniform, things were happening the way I would have expected. So here was that initial drop. You can see the accumulation distribution line went down. So it seemed like there was a lot of selling, not just at the opens, but also throughout the day. And you can see that with all these red candles. But after we bounced and started going down again, you had some red candles, but you also had some really powerful hollow candles. And so what was happening is the price kept going down. The accumulation distribution did not. And so we reversed, started turning back to the upside, and we have continued to strengthen off of this. So my whole spiel over the last 4 to 6 weeks really has been that there's accumulation taking place. Everything you see and hear on the news, social media, everything else is very bearish, very fearful, but that's not what I'm seeing in the market. That's not what I've been seeing for the last 6 weeks. As the market's gone down, there have been plenty of buyers. From the opening bell, there have been plenty of buyers, not in airlines, not in cruise lines, not in hotels, not in gambling stocks, not in home construction, but in other areas, especially healthcare and technology. Those are the two really key areas. And then some other industry groups in other areas of the market. But really, healthcare has been the strongest. I would say technology is kind of right behind. Some of the consumer staples area has been strong. Many of the consumer discretionary areas have picked up. One of the most shocking to me is probably restaurants. I mean, when you go out and you start closing restaurants around the country, and then I see restaurants outperforming, that tells me something. I'm not quite sure what it tells me. It's just that, it's the market's not acting the way you would expect. And many of the restaurant stocks like Wingstop and Chipotle are really outperforming. Starbucks has been performing pretty well. Some of these companies that look like, they really should be taking a hit, and they're not. And I think that's telling us something. All right, let's see. Let's move on to, let's take a look at the 10-year Treasury yield. This morning, we are seeing it up a little bit today. We're off the earlier high, but we're still up almost 3 basis points, 0.624%. Some of the news out today, first of all, really no economic news out today. But as I mentioned, the FOMC meeting begins tomorrow morning. Policy statement will be out Wednesday at 2 p.m. Market can have significant movement based on the policy statement announcement. A lot of times if the market moves up into that meeting, then I generally, normally you'll see a sell on the news kind of a thing. But if the market hesitates or moves lower into that meeting, then a lot of times you will see the market rebound. Especially, again, I can't imagine that the Fed's going to say anything that would be destructive to the stock market. The Q1 GDP initial reading comes out Wednesday morning. So if you're wondering what's been going on in the economy first quarter, you'll find out a little bit in that report. Keep in mind that really January and February's GDP was unaffected by this. It's really as we get into March. So I expect the number will come in lower than what we previously had been expecting, simply because March we had shutdowns everywhere, and a lot of the growth should have contracted. I mean, we should have seen some contraction in March. Q2 GDP is going to be the one that's really going to be hit hard. We'll see about Q1 GDP. I don't think that the hit will be that significant, although I would expect it to be lower than what we were originally looking for. Also, tomorrow, April consumer confidence comes out at 10 a.m. March was 120, and that fell 12 points. I think February was 132 or thereabouts. So March had a little bit of a hit, but again, March was not, that's where things started to go haywire. April, I think, is going to be a much worse month, and the consensus estimate is 95, which is a 25-point drop from 120 to 95. But the range, the consensus estimates have come in anywhere from 75 to 106. So the consensus is 95, but clearly we could be anywhere with this report. And so that's one I'll be watching tomorrow at 10 a.m. And I'm sure the Fed is going to be watching that as well. Consumer confidence is a pretty important part of our economy. The Fed wants consumers to be confident, and a lot of the steps they've taken have been taken to improve consumer confidence. So we'll see how that report comes out tomorrow. That'll be one to watch closely, not just the report at 10 a.m., but also because it's during the trading day. Let's see what kind of initial reaction we get from that. Some of the top stories today. Well, futures are up to start the week. Dow Jones futures, like I said, up pretty strongly, a little over 200 points. Nasdaq futures up a little bit more on a percentage basis and on a relative basis. And many key components of the Nasdaq 100, set to report earnings later this week. So we've got companies like Apple. Let's take a look at that chart. Apple, look at the accumulation distribution on Apple. Prices were going down, but never broke down in terms of accumulation distribution. I think Apple found plenty of buyers. While everyone was panicking out, a lot of individuals panicking out of the stock, I think you had a lot of professionals ready to scoop shares up at a much cheaper price, and we continue to move higher. So I think Apple looks good, bouncing off the 20-day. This is what you expect in a bull market. Moving up, getting through the 20 starts rising, you pull back, you hold it, you bounce. PPO goes positive. I mean, right now, some of the key leaders in the market look pretty strong. I mean, they look like they're in a bull market, the way that they're behaving. So you've got Apple. Take a look at Amazon. You wouldn't know Amazon going through a pandemic, and that things were horrible. I think Amazon's benefiting. They've already come out twice and announced on two separate occasions that they were going to hire 75,000 and 100,000 employees. So they've got so much business as a result of this pandemic. Breakout above about 2175. You've got the 20-day moving average now up at 2205. Amazon reports later this week. I suspect they're going to have a great report. The only question is it a buy on rumor, sell on news? If it's a sell on news, I'd be buying on that selling. I think anything down close to that 20-day would be very interesting entry on Amazon. Microsoft reports later this week. Microsoft also trading like it's a bull market. And again, the AD line, prices kept going lower. AD basically held that early move down in February. Again, February acted like maybe it was the start of something bad, but price action suggested that it was continuing, but the accumulation distribution did not. That's where we saw this divergence. Companies like Apple, Amazon, Microsoft being accumulated while everyone else was panicking out. And it's just the really poor areas of the market that I would be staying away from. Airlines, the cruise lines, gambling, hotels, home construction, mortgage finance, those areas that have been beaten up and really haven't seen much relief. There's a reason why Wall Street is staying away from those companies, and we should stay away too until they begin to show some relative strength. All right, Google reporting later this week. Look at the accumulation distribution. Hardly took any hit whatsoever, just keeps moving up, trending above its 20-day, PPO positive. Again, Google looks good. Facebook just broke out. Look at the accumulation distribution. I mean, it looks like the entire year. If you just looked at this and you didn't look at the price chart, you'd say nothing was wrong. Facebook's just continuing its accumulation distribution move to the upside. A couple hiccups along the way. You'd never know that the stock fell from $225 to $130 and change. That just doesn't show up on the chart. And again, it's because all these gap downs at the open, everybody panicking at the open, and then professionals stepping in and thanking everyone for the cheaper shares. Buying. And now we're seeing things picking up. Problem is, if you panicked out 140, 145, 150, now you're looking at the price at 190. And I think a lot of folks are hoping that the market goes back down to those prior lows. I don't think it's going to. Just my opinion. I think we're in a secular bull market. I think we had that huge move down with volatility spiking to crazy levels, crazy fear. The market threw the baby out with the bathwater, threw in the kitchen sink, and I think marked a major low. I think we could pull back some. I'm going to be really surprised based on everything I'm seeing. I'll be really surprised if we go back down and test that March low. Shocked, maybe would be a better word for it. I think a lot of the uncertainties that created that fear, I'm not saying they're out of the way, but I mean, you've got now much more information on the virus than we had 2 months ago. We know kind of how it spreads. We know more about how it spreads. We've gone through all this social distancing. I think everybody, just about everyone, has it in their head now that, hey, if you're walking up on somebody, maybe move over 3 or 4, 6 feet, whatever. When I go out, if I go on a walk, everybody moves away from me, or I'll move away from them. I mean, everything has changed. And, I think that is going to help contain the spread. And if we can if we can contain the spread, business can start to get back to work. And by the way, 2 months ago, we had a really strong economy. So I don't know, some think that this is just going to completely annihilate our economy. I don't think that. I think it's a short-term down and a quick recovery back. I think a lot of folks will get their jobs back. And in the meantime, the government's giving them money like nothing ever happened. And so they're hoping that the economy will pick right back up where it left off. I give them the benefit of the doubt. Again, we're in a secular bull market. I think it's going to, I think we'll continue to rally with setbacks along the way. There are going to be some news, some things that are going to happen we're not expecting. Market will roll over. Everyone will get fearful again for a brief period. Then I think buyers step back in. And keep in mind, if these are professionals that have been buying at the bottom, these are not weak hands. Individuals are weak hands. We saw that in the panic. Professionals are not. And so as they buy and they accumulate, unless something horrific happens out there, and I'm not talking about in terms of economic reports, because I can tell you those are going to be bad. The market knows that. All the professionals know that. Wall Street knows the economic reports are going to be bad. I don't think, if you lose, we've already lost 26 million jobs. What's going to happen from here that's going to top that? I don't know. I believe we go higher. Anyway, this morning, gold flat near the 1,735 per ounce level. Oil down another 25%, $4.27 to $12.67. This was probably a half hour ago, so some of these numbers may have changed. 10-year Treasury yield up 3 basis points. Just talked about that a minute ago. Just above 0.62%. Asian markets were higher overnight. Bank of Japan came out and announced a series of measures to combat the pandemic's impact on its economy. So if we pull up the Nikkei, this isn't going to show today's action or last night's action, but Nikkei up 521 points, 2.7%. So that takes it up to almost 19.8, very close to where the recent high was, very close to the 50-day moving average. That was a nice move. And if we get another follow through later tonight and into tomorrow, we could see the Nikkei breaking out. Don't fight the Fed. Well, don't fight central bankers anywhere. Bank of Japan is helping, doing what they can to help the stock market there and to help the economy there. I see a breakout coming. And if we start breaking out in other areas around the country or around the globe, that's only going to help things here in the U.S. Also, Hang Seng up 448 points, 1.8%, almost 1.9% overnight. So 448 points there takes us to 24.3 and change. So not quite, not looking quite as good as the Nikkei, but not too far from the 50-day, not too far from the recent highs. So keep an eye there. Europe is also trading substantially higher this morning. Last time I looked, German DAX up 277 points or 2.7% to 10,613. So right up in here, trading above that 20, below the 50. The German DAX tends to trade a lot like the S&P, and this is almost what we were looking at on the S&P 500. Above the 20, below the 50, with the two squeezing together. Well, the German DAX doing the same thing. We got a nice day today with the DAX up 2.7%. I wouldn't be surprised to see the market here in the U.S. maybe follow suit. I don't know about 2.7%, but I wouldn't be surprised to see another strong day today on the U.S. indices. One other news story, individual stocks, and this is a company that's on our strong AD chart list, and that is Audio Codes. This is a company, if you look at the AD line, when this thing was going down, look at the AD line going up. I don't know if that was a true, I don't think that was, I think maybe there was a false reporting or something of a trade. I wouldn't pay much attention to that long tail, because the volume, to have that kind of a tail from going from $18 to $9, I would expect the volume to be off the charts, and it's not. So I don't think that was a correct trade. But anyhow, you can see that we were going lower, bounce lower, and yet the accumulation distribution going higher. Stock made a good move. Look at the volume coming in. Just recently pulled back. Well, today, Google and Audio Code collaborate to bring voice services to the Google platform. So all of that accumulation now starting to make a little bit of sense. Big move on Audio Codes. I think let's get an update on that where it's trading, but it was having a huge morning. Up 17%, $4.2713. So pretty important to follow this accumulation distribution. It doesn't happen for no reason at all. It happens because you've got folks out there willing to accumulate. Now, this signal by itself, I think, is meaningless. I think, in addition, I've seen some really bad companies. I was looking at some over the weekend. There are companies that are really performing poorly that have strong AD lines. Not many, but there are a couple. So just looking at this by itself, I think, can be a mistake. But use it in concert with relative strength. I mean, if you look at Audio Codes, we were also setting a new relative high to telecom stocks. And telecom had bounced back in March, broke this downtrend. So you got an improving group, and you got one of the leaders in the group, and you've got the accumulation distribution rising. So that combination is what I'd be looking for. But Audio Codes looks really good. And like I said, trading up to 27 could be challenging that 28 and a half high that we saw back in January and tested again in early April. All right, I'm going to go into area that I call talking technically. I just want to pull up a couple of key sector charts and forget about I'm not really worried too much about the accumulation distribution. These are going to be pretty strong for the most part, but I'm talking technically about the charts themselves. And as you're going down, you can see a lot of these hollow candles, which also confirms that whole theory on accumulation. But look at the PPO going back above the center line. Normally in a downtrend, you normally see the PPO fail at the center line, roll back over. You see key moving averages failing as you move up and rolling back over. That's what we saw initially. Here we came up to the 20-day, and then we rolled over, and I thought, okay, this is it. We're going back down. Well, we didn't. We came back up, broke out again. We broke out above 82.50. We have not even gone back down. Well, maybe that next day we had this red candle. We got close to 82.50, went back up again, trending higher. PPO breaks above center line. When that happens, I look for 20-day EMA support. We come down, we basically hit it, closed just a fraction below it, and now here we are bouncing again, and with futures up, we could see the XLK break out again today. This is bullish behavior. This is not bear market behavior. So I know that there's still a lot of folks think this is a bear market, we're rolling over. I would again focus on the big picture, the secular bull market that's out there. This is not year 2000. This is not 2007. This, we're not in the midst of a secular bear market. We're not at the end of a long-term secular bull market like we were in 2000. We came into this pandemic with one of the strongest economies we've ever seen. We came in with a much stronger financial system than what we saw back in 2007 through 2009. Completely different scenario. And we know that the problem that's creating this move created the move to the downside in March is likely a temporary problem. It's a virus. It's not the end of an economic cycle. We had no signs of that whatsoever in February. This was a one-time event that came in. I think it's very similar to what we had in 1987, where the market was setting all-time highs, and then all of a sudden, boom, we get hit with something out of the blue, we go down, and then we simply start rallying right back off of it. That's exactly what we're doing here, and what I think we're going to continue to do. Let's look at the XLV. XLV, big move up, not really even pulling back to test the 20-day. I mean, this is a powerful looking chart to me. Look at the PPO just continuing to push higher. I see a lot of momentum. This does not, again, look like a bear market chart to me. There's just, we should have been turning, here, certainly by the time we got up here. Look at that big red candle at the 50-day. That would have been the time to go down, and yet bears couldn't get any control whatsoever, and we keep moving. Last thing I want to point out here is look at the VIX. I mean, the VIX, big down day on Friday, down 13%, setting a new low. We're about to go down to 35, below 35. That to me is, as fear comes out of this market, it's hard for the bears to get control. When you're in this steady downtrend in fear, you get bad news and you go down temporarily and then the market comes right back up again. So I would be really careful based on the VIX coming down as well. I think that's another positive sign for the market. Okay, earnings spotlight. Just want to go over, there's really not any major companies that came out with earnings. I do want to point one out. I didn't see any pre-market trade going on here. CNX, though, came out 19 cents versus 11. This is a coal company. But look at the breakout and look at the accumulation distribution. So here, as we kept going down, we went down a little bit, and it looks like we maybe moved to a brief new low. But then when we rallied and pulled back almost equal in price, the accumulation distribution didn't come down. And look at it on this latest move to the upside. The earnings at 19 cents versus 11 cents were justified based on this move to the upside. I think there was a lot of accumulation taking place. And if we get a sell on the news and this stock gets back down to $9.50 to $10 after hitting over 14 recently, that would be a level to watch. CNX is on our strong accumulation distribution chart list at EarningsBeats. Also, by the way, before I forget, I do want to mention we have an event coming up this afternoon at 4:30. It is our Q1 earnings webinar. Last week we had a sneak preview, just kind of wet our whistle a little bit for the start of earnings season. But tonight we're going to have a lot more companies to go over, not just the ones that have already reported strong earnings, because there have been probably 40 or 50 that I'm adding to our strong earnings chart list, and that will be out to you later today. But also we've got upcoming reports, and I think accumulation, distribution, and relative strength can really give us a solid foundation for predicting which of these companies is going to come out with some strong numbers, and I'm going to talk about that during the webinar. So that starts at 4:30 today. If you're not a member currently at EarningsBeats, we have a fully refundable $7 30-day trial. So you come in, you pay $7, we give you your $7 back, and you have 30 days of the service, which will include these webinars that we do frequently, including tonight's at 4:30. So I would strongly suggest that you take us up on our generous trial offer and see if you like what we do. If you're a Stock Charts Extra member or above, we have chart lists like the strong earnings chart list, like the strong accumulation distribution chart list, that we will let you, we have links on our website. You click on the link, type in our password, and then you can download these chart lists right into your account. Saves you a ton of time. Let all of our homework and our research benefit you. So definitely check out the webinar tonight if you can, 4:30. All right, upgrades, downgrades, ALV upgraded. This was a stock that just recently came out with earnings and a nice reaction. I kind of looked at this and just, I ended up deciding to put it on the strong earnings chart list. So this will be a company that's on there when you get the updated list. I was looking, the AD line was going down, but it started to really strengthen here. And look at the action in April. We've gone up 50% heading into the earnings report, and then we beat. And now we're getting an upgrade. This is a company that's starting to show a lot more strength, and it's been behaving more bullishly, holding that rising 20-day with the PPO finally breaking back up above the center line. So this one was added. I think the upgrade, I like the upgrade here. eBay was upgraded. eBay also making a big move here with the AD line strengthening. So eBay showing a lot of strength. DGX, this is Quest Diagnostics. Look at the strength here. Look at the volume. Look at the AD line. PPO breaking out. There's a lot of good things happening in this market. It's why I can't get overly bearish. Beyond Meat downgraded. So Beyond Meat was downgraded. Look at the AD line hovering down near the bottom. So we've had a nice move to the upside, but even with many of these days with the volume picking up, see how you have tails to the top? It means that there's sellers intraday. And so I think the downgrade's warranted. I would be looking for maybe a pullback to the 20-day on beyond. And that is it for upgrades, downgrades. The market just opened. I'm going to give you the 3 that you must see. And I'm just going to pull up 3 big earnings reports coming up later this week. And I already pulled the charts up, but I'm going to pull them up again here. I want you to focus in on the AD line on Apple. Beautiful move here. Holding the 20-day PPO positive. I expect Apple's going to have a good report. Amazon, I mean, the numbers here on Amazon, I think, are going to be off the charts. It's just a question of whether or not there's been so much of a run-up that we have a sell-off on the earnings news. But AD line is awesome. Huge moves up, great volume trends. PPO is awesome. I mean, I have no problems here except the stock just overbought because of the huge move. And then the last one I wanted to bring up is Facebook. Facebook really looks good. I mean, the move up here, PPO breaks out. We've got the action, price action above the 20 just crossing the 50. So we're getting that golden cross. AD line's been strong all along. So again, while everyone's selling, panicking out of these companies, Wall Street professionals are saying, thank you very much. We would love to buy this stock 30% off, 40% off. And that's what they've been doing for the last 5 or 6 weeks. You know, in 6 months from now, maybe a year from now, I believe we're going to be at an all-time high, and we're going to be looking back at this period saying, wow, what an opportunity. It's my opinion. All right, last thing, let's just see what the market's doing here. It has opened. We have got the S&P 500 right now up 20 points, Dow's up 112, so it is lower than what it was or what we thought it was going to open at. Nasdaq still up 75 points though, breaking above 8,700. VIX now down another 1.39%, still in the 35s, but if that VIX keeps dropping, it's going to be really difficult for the bears to gain control here. I want to wish everybody a great day. Remember, later today we'll be getting that strong earnings chart list out to you. And 4:30, we've got the big webinar coming up. This is a quarterly one that you really don't want to miss. Q1 earnings. Go through a lot of companies that have already reported. We're going to look at some really good charts. And then also upcoming earnings reports. We've gotten a lot of positive feedback from our members on helping to predict the future earnings, you know, and how the company is going to react to earnings based on relative strength, based on their previous earnings reports and their history, but now also based on accumulation distribution. I think the combination of this is powerful, and I will hopefully demonstrate that to you today at 4:30. Everybody have a great day. Happy trading.